Welcome to the deep dive. Today, we're really digging into what it takes to, launch and grow a business.
We are. Our source is the Infographic Guide for Entrepreneurs by Carissa Lytle and Jara Kern.
Right. It's this fantastic visual guide just packed with actionable stuff.
And our mission, really, is to pull out the absolute best knowledge nuggets, the practical advice from this guide.
Yeah.
So whether you're just thinking about starting something, or maybe you're already in the thick of it.
We want to give you a clearer roadmap.
Exactly. Focusing on those sort of surprising facts and the really essential takeaways that can make a difference.
Okay, so let's break this down. The guide lays out the whole journey in stages, doesn't it?
It does, really logically.
It covers, getting started, then budgeting and finances, which is huge, then marketing and promotion, the running your business day-to-day stuff, and maybe the most important, living your best work life.
Sustaining yourself.
Yeah. Okay, so kicking things off, that first big question, what kind of business should I even start? The guide says, look inward first.
Exactly. And that's a step people often skip. They jump right to the idea.
Right.
But this guide recommends a really candid personal assessment. It's not just what you want to do, but what you can, realistically.
Okay, so what does that involve?
Well, think about your finances. I mean, do you have savings? Enough to live on for months? Or do you need profit like yesterday, your current employment? Are you passionate about this leap? Or is it more escaping a bad job?
Big difference in motivation there.
Huge.
Yeah.
Then, resources, what you already have, skills, network, maybe equipment. It's not just cash.
Good point.
Time commitments. This one's massive. How much time can you really carve out, around work, family, other things, without totally burning out?
Yeah, got to be realistic.
And finally, risk tolerance. The guide points out this spectrum, right? From scaling up freelance slowly to just jumping in feet first.
Yep.
Knowing where you are on that helps manage stress, manage expectations. It's vital.
So once you have that idea, maybe based on that assessment, the next hurdle is making it stand out right in a crowded market.
The unique selling proposition. Your USP.
Yes. The guide really hammers this home.
And what's really insightful is how a strong USP doesn't just attract the right customers.
It actually pushes away the wrong ones.
Exactly.
Yeah.
Which saves you time, saves you marketing money. A good USP helps you stand out, sure, but also gives you pricing power.
How so?
Well, if you're truly unique, people can't just compare you on price easily.
Oh, no,
It means you offer things that really hit home for your ideal customer, that builds loyalty, makes you memorable. It's like the core of being different.
And the guide gives 5 tips for crafting a good one.
Yeah, really practical stuff.
First, know your customer. Really know them. Preferences, habits, worries.
Not just demographics, deeper.
Second, surprise and delight. Go that extra mile. A note, a follow-up, something unexpected.
Builds that connection.
Third, be personable. People buy from people, right? Your personality matters.
Absolutely. Authenticity connects.
Fourth, be different. And I love this bit. Avoid the best trap.
Oh, yeah, that's crucial.
Someone can always be better. Focus on what makes you unique so comparisons don't even work.
Makes you incomparable.
And fifth, tack the tribe. Listen to your customers. Feedback, good and bad. Then iterate.
Constantly learning, adapting.
Okay, so idea, USP, then comes the structure, the legal setup.
Foundational, yeah. The guide's section 5, Ways to Structure My Biz, is so important.
Why is that?
Because it determines your tax status, and crucially, it's your legal shield, your protective barrier.
Right.
Lots of people default to sole proprietorship because it's easy.
Guilty is charged, potentially.
But the guide kind of nudges you to think long-term risk. That lack of separation between you and the business, it can be a ticking time bomb for your personal assets if things go wrong.
Oof, okay.
So this choice hits your taxes, legal stuff, even legacy plans, and definitely the risk to your personal finances.
Can't stress that enough. So the 5 types they mentioned.
Right. Sole proprietorship. You and the business are one. Legally.
Simple but risky.
Partnership. Like a sole prop, but 2 or more people sharing the liability.
Okay.
Then the ones that create separation.
Yeah.
Limited liability company, LLC. That gives owners a legal barrier.
Popular choice.
Limited liability partnership, LLP, often used by consultants, professional services.
Got it.
And the S corporation. Income losses divided among shareholders also gives you that legal protection.
So the key thing for you, the listener, is figuring out how much personal risk you're comfortable with and, well, how you see the business growing.
Exactly. And that strategic thinking flows right into what's my vision.
The heart and soul, the guide calls it.
Yeah. It's not just some fluffy statement. It's your North Star. It defines your big goals, your purpose.
Why does that matter day to day?
Because it guides all your strategic decisions.
Yes.
Every choice filters through that vision. And just to clarify, the mission is why you exist now. The vision is where you're going. Sweeping, forward-looking, your aspiration.
Okay, vision set. Then the name. What's in a name? The guide has 6 steps.
Naming's harder than it looks.
Totally. First, decide if you are the brand, your name, or if something separate.
Big implications there.
Second, get inspired. Look at names you like. Why do they work?
Good exercise.
Third, be clear, or you'll need a tagline. If the name's creative but obscure.
You need to explain it quickly, yeah.
Fourth, is it already in use? Check databases like InterNC, but also social media handles.
Crucial check, don't forget those handles.
Fifth, determine your domain .org for nonprofits usually, .com or .biz for profit.
Standard practice, but important.
And sixth, ask for feedback. Trusted friends, advisors, get fresh eyes on it.
Yeah, they might spot something you missed.
So beyond the name and structure, the guide also mentions office options, like where you actually work.
Right, acknowledging that the traditional office isn't the only way anymore.
So what does this suggest?
Well, co-working spaces. You get amenities, networking, meeting rooms, usually on subscription, and impromptu workspaces. Coffee shops, libraries, great for flexibility, but you got to think about noise, taking up tables, making client calls.
Professionalism matters.
Exactly. Find what works for your productivity and your image.
And that flexibility might help with managing money too, which brings us right to the bottom line. Finances.
Yeah, let's talk money. The guide has this great reassuring section, accounting without a CPA.
That sounds helpful.
It is. It gets that most entrepreneurs aren't accountants. The key takeaway is you don't need to be an expert to keep things simple and effective.
So it's about systems, not expertise.
Precisely. Good systems are key.
And part of that system is knowing your deductions for tax time. The guide lists 5 main ones.
Yep. Got to know these. First, business and professional fees. Lawyer for the LLC setup, memberships.
Okay.
Second, auto and travel expenses, conventions, trade shows, even 50% of business meals. And mileage, they mentioned 54.5 cents a mile back in 2018.
Wow, that adds up.
It really does. But the guide stresses meticulous records, digital logs, apps. The IRS wants proof.
No kidding. What else?
Card, phone, and internet, the business portion. Fourth, software, supplies, equipment. Computers, subscriptions, office gear, depreciation deductions.
Family stuff.
And fifth, healthcare. Deductible for small business owners, but depends on your structure. Sole proprietor, 100% on Form 1040.
But they advise checking with an accountant?
Absolutely. Rules change, your situation's unique. Always get professional advice there.
Smart. Now, before deductions, you need a bank account. Bank on it.
Right. First financial step. The guide says shop around, call like 3 or 4 banks. Compare rates, fees, perks, ask about minimum balances.
Do your homework?
Yeah. And here's a crucial point, that did you know bit. If you set up an LLC, LLP, S-Corp, you built a legal wall.
Right, the separation.
To keep that wall strong, you must keep business funds totally separate from personal. No mixing.
Why is that so critical?
Because if you blur those lines, a court could decide your business isn't really separate. And boom, your personal assets are suddenly at risk. It negates the whole point of the structure.
Wow. Okay, super important. So accounts set up, money separate. Now you need to actually get paid.
The getting paid, a step-by-step guide, very practical.
What are the steps?
First, decide how you'll bill. Upfront, progress payments, based on the agreement.
Right.
Second, complete any required forms before you start. Vendor agreements, POs, get that sorted early.
Good tip. Avoid delays later.
Third, create a professional invoice. Use a template. DEET, invoice number, contact info, clear description of service fees, total due, all the basics.
Seems obvious, but easy to mess up.
It is. Fourth, include terms. When is payment due? Net 15, net 30. Understand this because it hits your cash flow. How quickly you get paid affects when you can pay your bills.
Right, cash flow is king.
And fifth, track accounts receivable. Know who owes you what. Use tools like FreshBooks, QuickBooks, even just a good Excel sheet. Stay on top of it.
Ooh, what if they don't pay?
Yes. Unpaid invoices and collections. The guide tackles this head on.
What's the advice?
First, just follow up. Don't feel bad about it. Persistence often works.
Okay.
If not, send a second notice. Maybe a bit firmer. You could also offer an alternative payment plan if they're struggling.
Be flexible, maybe.
Yeah, sometimes. But as a last resort, if it's like over $50 and 90 days late, You can use a collections agency.
But there's a catch.
Big catch. They take a cut, usually 15–25% of what they collect, and there's no guarantee they'll get it all. It's costly. So try to resolve it earlier if you can.
Makes sense. Okay, so we've covered getting paid. But how do you get the clients in the first place?
Yeah.
Marketing and promotion. Getting noticed.
Right, and the guide, interestingly, starts with a short history of the logo.
Oh, like why logos matter.
Exactly. It traces them back thousands of years. Ancient seals, coins, coats of arms, even watermarks.
Oh, wow.
Connects it to the Industrial Revolution, rise of advertising, posters. The point isn't just history. It's that the purpose of a brand mark, clarity, recognition, differentiation, it's timeless.
That's a cool perspective. It's not just a modern thing.
Not at all. And building on that, it details the different types of logos you might choose.
Okay, what are they?
Ideographs. Totally abstract, like the Chase Bank symbol. Relies on pure design feel. Pictographs. Iconic. Representational. Think the target bullseye. Directly suggests the name or purpose.
Got it.
And word marks. Just the company name in a specific font, like Coldwell Banker. Typography is the brand.
So the choice depends on your strategy, how you want to be seen.
Exactly. It's not just about looking good, it's strategic communication.
And these days, a huge part of that communication is social media.
Indispensable, really. The guide highlights how it strengthens your brand. It's not just shouting into the void.
How does it help?
Builds relationships, actual two-way conversations. Offers better customer service, quick responses, you get insight, fast feedback.
Yeah, direct line to the customer.
Plus access to industry info, influencers. Keeps you in the loop.
But there are so many platforms. The guide helps with choosing.
It does. The being social, which channels should I use section is super helpful. The key isn't being everywhere.
It's being where your customers are.
Precisely. Like
Right.
Facebook. Great for consumer brands, community building, post maybe 1–2 times a day, multimedia.
Okay.
Twitter, rapid fire news, engagement, short bursts, maybe 7+ posts a day, good for almost everyone.
Instagram.
Visual brands, lifestyle, personal brands, images, video, 1–3 times daily.
LinkedIn.
B2B gold, professional services, industry news, thought leadership, maybe 1 post a day.
And YouTube. Pinterest.
More specific niches, video content for YouTube, visual inspiration on Pinterest. The point is, be strategic, pick your channels wisely, don't spread yourself too thin.
Smart advice.
Oh.
Beyond social, it also mentions content like blogging, vlogging, podcasting.
Yeah, key content strategies. Blogging regular valuable content on your site. Aims for like 400+ words usually. Good for SEO, showing expertise. Promoted everywhere. Site, social, email.
Stalking.
Video version. Regular video updates. Great for personality connection. Promote on YouTube, site, social, email.
And podcasting. Like this.
Exactly. Connects on the go. Often simple recording setups. Builds really deep connections. Promote via podcast platforms, site, social, email.
So the value is consistent engagement, showing you know your stuff.
And building that loyal audience, yeah.
All right, let's shift gears to the nitty-gritty. Running your business. The day-to-day operations.
This is where the rubber meets the road. The guide touches on regulation and governance. Sounds dry, maybe.
But important.
Crucial. It mentions 6 main categories in the U.S. Advertising, contracts, environment, employment, finance, intellectual property. You don't need to be an expert in all of them.
But you need to be aware.
You need to know they exist and that compliance isn't optional. Ignoring this stuff can lead to serious legal and money problems later.
Okay, noted. Now, getting clients often means proposals. The guide has tips for winning ones.
Yes, 5 tips on creating a winning proposal. And a great pro tip first. Follow-up. 48 hours after sending, then maybe a week later if no word.
Persistence.
Key. Tip 1. Create a reusable template. Looks pro, saves time, ensures consistency.
Makes sense.
2. Use an opportunity statement. Just 2–3 sentences. Here's the problem. Here's how we fixed it for you.
Concise and focused.
3. Scope deliverables clearly. What exactly do they get? For what price? How many revisions? What are the final files? No ambiguity.
Manage expectations.
4. Include an expiration date. Creates a little urgency. Prevents deals from dragging on forever.
Good one.
And 5. Don't forget the fine print. Payment terms. Hourly rate for extra work. Termination rights. And they wisely say, if it's complex, have a lawyer review it.
Better safe than sorry. Okay, what about meeting with clients?
Some core strategies here. First, ensure you're a fit. Can you actually deliver? But also, will you work well together? Is it aligned with your goals?
Don't just take any project.
Right. Second, listen carefully. Really understand their needs, the scope, resources before you start pitching solutions.
Hear them out first.
Third, be responsive. Timely emails. Follow through on what you say you'll do. Builds trust.
And there's a pro tip about upset clients.
Oh, this is gold. If you get that angry email or call, take a deep breath. Don't fire back immediately.
Pause.
Respond with equanimity, calmly. It stops you from making rash decisions and helps preserve the relationship.
Excellent advice.
Yeah.
Okay, business grows. Maybe you need help. Hiring your squad.
Finding your people power, as the guide calls it. First step. List the exact skills and experience you need. Then decide. Full-time, part-time, contractor.
Be specific.
Very. Then the job description. Active title. Clear roles, 3 to 5 sentences. Sell the venture, list required experience, explain the application process, and be transparent about compensation and benefits.
What should that include?
Hourly salary, project rate, commission bonuses maybe, benefits like PTO or insurance, how often they get paid, any equity. And check your legal obligations for employees.
Right. Lots to consider. Then the interviews.
Yep. Interview tips they didn't teach you in school. Screen applications, first filter based on requirements.
Don't waste time.
Then interviews. Maybe a quick 15, 30-minute phone screen first.
Yeah.
Then in person for the top candidates.
And ask good questions.
Open-ended ones. Walk me through your resume. Why this role? What did you learn from past jobs? Hardest part of a job? Best feedback received? Tell me about a time things went wrong and how you fixed it.
Get them talking. Reveal how they think.
Exactly. Problem solving, self-awareness. That's what you're looking for.
Finally, in this section, growing and scaling. How do you do that without imploding?
3 key strategies, maybe a bit counterintuitive. First, avoid bottlenecks and dependencies. Think about subcontracting some work or automating repetitive tasks. Free yourself up.
Don't be the bottleneck yourself.
Right. Second, focus and simplify. Define your product services clearly. Find your niche. Don't try to do everything for everyone.
Be known for something specific.
Creates clarity, efficiency. And third, step back. See the big picture. Build systems so the business can run without your constant direct effort. Make it sustainable beyond you.
That's the real goal, isn't it? Okay, this next section feels incredibly important, maybe the most overlooked. Living your best work life. Sustainability for the entrepreneur.
Absolutely essential for the long haul. And the guide gives great practical advice on the home office, where does work end and life begin? Challenge.
The eternal struggle.
It really emphasizes setting and sticking to ground rules so work doesn't just take over everything.
So how do you find that balance?
Decide what balance means for you. It's personal. Then create a schedule and try to stick to it. Set physical boundaries, dedicated workspace, put the laptop away after hours.
Turn it off.
Coordinate with family, let them know your work times, and set client boundaries. No automatic evening weekend calls unless it's truly urgent.
Protect your time.
And the pro tip here is great. Working from home flexibility means you can work when you're most productive. Early bird, night owl, adjust your schedule. That benefits everyone, customers, family, you. Work smarter.
Love that. What about taking actual time off, like parental leave or sick days when you're the boss?
Yeah, no HR department to manage that for you. For parental leave, the advice is blunt. Save aggressively beforehand. Subcontract work. Tell clients well in advance. Line up. Help family, friends, sitters. Plan, plan, plan.
Be prepared.
For sick days, decide to take time off before you're completely wiped. Be transparent with clients. Cancel or reschedule meetings. And importantly, recognize mental health days are crucial too.
It's not weakness, it's maintenance.
Exactly. Preserves your energy, your passion.
We all hit slow periods too. Keep your cool during dry spells.
They happen to everyone, even big companies, but they feel rough when you start, maybe because you don't know the seasonal ups and downs yet.
So why do they happen?
Common reasons: lost a project, holidays, waiting on stuff from clients, maybe you eased off business development because you were busy. It's normal.
So the key is?
Anticipate them. Prepare financially if you can. And understand it's part of the cycle, not a sign you're failing.
Good perspective. To manage all this, the guide talks about an annual review for yourself.
Yeah, a self-review in 5 steps. It's not just navel-gazing, it's strategic.
What are the steps?
1. Inventory your work. Where did your time go? What did you produce?
Okay.
2. Attach data. Look at metrics: subscribers, followers, site visitors, conversions, revenue, profit. Let the numbers talk.
Get objective.
3. Check business health. Compare metrics year over year. Spot trends.
See the direction.
4. Where did your time really go? Not just output, but travel, admin tasks. The hidden time sinks.
Be honest about that.
And 5. Reflect. What went well? What could be better? Use this to get more efficient, more effective, and write down your big goals for next year. It forces clarity.
Allows you to consciously pivot or push forward.
Exactly. And that review naturally leads to never stop learning.
Training, continuing education.
Vital. The world changes fast. The guide says a good entrepreneur is always learning, getting current on tech, getting certified, maybe even going back to school.
Keeps you sharp, competitive.
It's a competitive advantage, not a luxury. Oh, and pro tip, training, conference, certification fees, often tax deductible. Invest in yourself and get a tax break.
Nice. Finally, for this section, time management do's and don'ts. Feels like survival skills.
Totally. The DOs. End today by listing tomorrow's tasks. Put biggest tasks first. Checkpoint during the day. Carve out focused head down time. Use buffer time between meetings. Learn where you work best.
Set yourself up for success.
The deuce. Don't check email reactively all day. Don't sprinkle meetings everywhere kills flow. Don't skip meals or sleep. Recipe for burnout. Don't be unrealistic about task times. Don't wait till a project starts to plan. Don't send rushed work.
Basically, be intentional about your time and energy.
That sums it up perfectly.
It's really impressive how thorough this guide is. It even covers when things don't go well and when it might be time to move on.
Yeah, it acknowledges reality. The sections on making it right when something goes wrong, like handling a poor review, an upset client, or catching a mistake.
It normalizes problems.
It does. The subtext is, mistakes happen. Criticism happens. It's how you respond that matters. It encourages resilience, proactive problem solving, not panic.
And then the end game, exit strategies.
Right. Every journey ends. It lists reasons for closing or selling.
Like what?
Opportunities might come up a great offer. Or life changes family, finances might force an exit.
So how do you handle that?
Communication is key when closing. Tell customers, partners, vendors, keep it factual, professional, no drama.
Graceful exit.
And it suggests alternatives, too. Could you just park the business for a while? Subcontract the workout? Maybe gives you options other than just shutting the doors completely. Preserve possibilities.
Strategic, even at the end. Wow. We have covered so much from the infographic guide for entrepreneurs. I mean, from sparking the idea, setting up the structure, finances, marketing, daily grind, staying sane.
Yeah.
It really is a full picture.
It really is. And if you connect it all, the big takeaway for me is that this whole entrepreneurial thing, it's not just about the business plan or the product. It's fundamentally about you, the entrepreneur.
Right.
This deep dive just underscores how tied together professional success and your own personal well-being really are. You have to sustain yourself to sustain the business. It's a marathon. Your resilience is maybe your biggest asset.
That's a powerful point.
Yeah.
Okay, final question then for you, the listener, to chew on. Given everything involved, the sheer scope we've discussed, what's one surprising area you'd prioritize investing in first, beyond just the startup cash, to really boost your long-term success and, frankly, your sanity? Think about that one. Thanks so much for joining us for this deep dive.